you didn't approach Fundrise from an emotional decision. You were searching for something that could be better than stock market or meta or whatever, or real estate, because real estate had kind of burnt you out. And you don't really speak about what was the competition to Fundrise, other than you put it in the stock market and then real estate. Like, at a later conversation, I want you to think about it, not right now, but like,
Okay.
you landed on Fundrise, but like, what was, who were the company, or if you could talk about it briefly in 5 or 10 minutes, like, who were you really like, do I want to do Fundrise or do I want to go over here? Because at that, if it sounds like at the point of you making this decision, Bitcoin was still really hot and a lot of people were invested in Bitcoin. It was very attractive at the time, but you saw all of that and you still decided, I'm gonna go Fundrise because I don't want to be a landlord, but I understand the value of real estate. Is that accurate?
I'll try and keep this succinct. My response to that is that conviction is a very personal thing. Having trust and conviction in something that you're investing in is a personal process. We've talked a little bit about this, like with our family members.
Absolutely.
Family members maybe trusting us or not trusting us or needing to be convinced. And at the time, I had $343,000 of equity to invest, and it was technically borrowed money. When you cash out the equity
right
in rental property, you owe that money back, and then it's in a pretty conservative debt instrument, I'll call it, because I have 30-year mortgages at fixed interest rates that I can comfortably cover regardless if I have renters or not. So is it more risky than having the cash? Yes, but in the grand scheme of things, it's I would say, for me, I'm very comfortable with that risk profile. So I was investing borrowed money.
Right.
And for me, I was investing a relatively large amount of money. And what I did as soon as I pulled that money out, as soon as I cashed out the equity, is I put it in U.S. Treasuries.
Okay.
I put it in 30, 60, 90-day T-bills because what I wanted to do was put a fail-safe in place to prevent myself from making a big, stupid, knee-jerk decision.
Right.
Because it was exciting. That was a lot of money to put to work all at once. And I wanted to prevent myself from being able to do it. Now, so, that was conservative and that was, I guess, prudent in hindsight, but I could have made a decision to put all of that into meta shares at $88 a share. And boy, would that have been lucrative. But I do not think it would have been possible. And I think it's safe to say it would have been impossible for me to gain the level of conviction in putting that amount of money into meta. That was the only thing that I was really seriously thinking. I was not toying with the idea of putting it into crypto, Bitcoin in particular, or anything else in general, because I didn't know jack squat about Bitcoin. I was invested in crypto at the time. I was invested in Bitcoin and Ethereum and Solana. Not yet.
You didn't have Doge? Everybody had Doge.
No.
You didn't have Doge?
No, I do not, and I don't think I will ever. But that is not something I was going to have the level of conviction to put that much money into. Now, I sold to a few $100,000 worth of Netflix shares a long time ago that are now worth $20 million. So I am not worth $20 million because I made that decision. That's a very formative experience. And I bought, I don't know, $40,000 worth of Groupon shares that I sold at something like, I don't know, $6,000, $7,000. That's a formative experience. I actually sold the last of those shares today. And so that's part of my psychology of money. That's part of my fingerprint of investing. And all of that, all of those thoughts and feelings and experiences went into my decisions on how to invest that equity that I cashed out. And so in summary, I had the conviction in Fundrise, the platform, in Ben Miller, the CEO, that I've listened to that man talk, I want to say, for 80 plus hours through all of his interviews, off of Onward and on Onward. And I've read just about everything he's written on Reddit. It's hard to get that level of conviction without putting in that time and effort and energy and interest. And I just don't see me getting that in very many other things. I have other investments that I put quite a bit of money into, but I did not do that same level of due diligence that I did with Fundrise. And so the competition was any other publicly traded stock. The competition was not crypto. The competition was T-bills, which at the time were paying 5% a year.
Right.
And I was not swinging for the fences with that borrowed money. I was looking for singles, doubles, and triples, which I think the innovation fund could potentially be a triple.
Right.
Meta at $88 a share would have been a grand slam. And so that's my answer to your question.
Okay. Good. Let's recap.